As countries around the world battle on energy and food crisis and recover from the pandemic, we explore the current state of global economy and what this could mean for Taiwan and the region. Hi, welcome to Taiwan Talks, covering the latest global news and analysis from Taiwan perspective. I'm Catherine Liu.
I'm Rath Wang. Joining us in the studio today is Peter Kurz, Chief Strategy Officer at Quantum International, also known locally as Mr. Taiwan. Peter is an expert in the region's financial markets and plays a key role in attracting foreign investors to Taiwan. I spoke earlier to Alex Capri, research fellow at the Hinrich Foundation, focusing on advancing sustainable global trade. Alex spoke about Taiwan's vital role in the global supply chain and what opportunities lie ahead for the country. We'd first like to talk about the current state of the global economy. The International Monetary Fund has released its World Economic Outlook in October, projecting a global slump with a modest 4.4% growth for 2022, dramatically down from 5.9% in 2021. Similar projections have also been made by the World Bank, the OECD, and other global organizations.
So Peter, to start off, I'm so curious, what's your observation on the overall world economy as every country started to reopen and recovering from the pandemic? Especially, do you have any observation toward Singapore, Japan, Hong Kong, which have a strong tie with Taiwan?
Sure, Catherine. Well, I'd say, first of all, I'm overriding concern about the global economy is the huge amount of debt that is built up over the years, really, and particularly during periods of very long and extended low interest rate policies by central banks around the world, of course, led by the Fed in the U.S. And this has led to a buildup of debt since the '08 crisis, to both at the public and private sector level. But of course, during COVID, there was a surge that puts that number well beyond what I think is a sustainable level. And this has now been exacerbated by the rise in interest rates, forcing, I think, economies, governments and corporations to begin reducing that debt. And that's going to be fairly recessionary pressure that the world will be facing. Secondly, as that debt, and the bulk of it, certainly the bulk of the foreign debt is denominated in US dollars, will require these governments and corporations to take US dollars out of the system and to pay back the debt. So when that debt's created, it's creating liquidity, it's creating demand, and it's pushing product, commodity and goods prices higher. When it's paid back, it's putting all that growth in reverse. But it's also creating a shortage of US dollars in the market as this debt is being paid back. And this is why the US dollar has been so strong over the course of this year and probably going forward as well. So these are major headwinds that economies around the world will be facing, and in particular non-US economies as well. Obviously, it helps exporters to have a weaker currency to export from, but their cost of the input, the capital equipment, raw materials, and so forth will be increasing. So typically, this is still a fairly negative factor for export-oriented economies like what we see in the Northeast, here, Northeast Asia.
We've talked about this. Different central bank in different countries use different measures to combat this situation. How's Taiwan doing right now, overall, at this particular timing?
You know, if we look at the countries that are at risk to this sort of deflationary or reducing debt burden trends that we're seeing, Taiwan's probably one of the best placed in the world. If you look at countries like Greece, for example, their total debt to GDP ratio is on the order of 300%, 290%. Japan is well up there. China's up there, even the U.S. And even a lot of Europe, France, Scandinavian countries are all in a relatively high-risk position right now at these 200+% levels. Taiwan, 28%.
See.
And this has always been the case in Taiwan. It's always been a very conservatively managed economy. Corporations keep very low debt levels typically as well. And so this is putting them in very good stead now. It it creates disadvantage to them during periods of expansion. They tend to be slower than countries like Korea. But in periods of contraction, Taiwan is a very safe place to be. And on top of that, our domestic liquidity situation is still quite good. Interest rates remain quite low. And in the past periods of high interest rates in the U.S. and around the world, Taiwan rates also tend to stay low too. So in the situation where you're looking for a safe haven, Taiwan's not a bad place to look at.
One of the best places in the world, you said.
How would Taiwan compare to, say, Singapore or Hong Kong, where investors kind of, pick and choose between these Chinese-speaking communities?
Yeah.
Well, in the analysis I just mentioned, the numbers don't look very good for Singapore at all, but that's because Singapore is a financial center. So there's a lot of debt in Singapore, but that's because it's debt created from the financial market. So in fact, I think Singapore is in a very strong position. Obviously, it has benefited more recently from some migration out of Hong Kong for financial professionals. But on balance, I'd say the two will tend to do relatively well. Singapore has the advantage, though, of having a separate currency. The Hong Kong dollar is obviously pegged to the U.S. dollar, and that will mean the Hong Kong dollar will rise in sync with the U.S. dollar, which may put certain industries at a disadvantage. But on balance, I don't see any real risk there. There is a risk, and the World Bank actually pointed this out a few months ago, of a global debt crisis of some sort, for the reasons I mentioned earlier. And indeed, every time we've seen interest rate rises to the extent that we have seen more recently, every single time there has been a recession that follows that. And we are also seeing an inverted yield curve now, which is also a very consistent signal or precursor to a recession. We haven't seen this degree of yield curve inversion, roughly about 0.5%, since 1980. And if you remember, 1980 or 82 roughly was a period of, again, a third world debt crisis that hit mostly Latin America, also parts of Eastern Europe. And there are, as I said, a number of countries that are vulnerable to that now as well. And so this could be some sort of repercussion we could see down the road a bit. Although so far things have been still relatively stable.
With that in mind, as you mentioned, that Taiwan's a very stable place to be, do you see anywhere in terms of industries or in terms of the overall market where Taiwan can kind of make headwinds ahead of Singapore or Hong Kong?
Yeah.
Well, it's interesting. I've talked to some government officials about this as well. And yes, I mean, there are certainly opportunities out there. Now, one reason Taiwan has such low leverage levels is because there are still fairly tight capital controls here in Taiwan. And we have those controls because Taiwan's not a member of the IMF. Taiwan doesn't have a backstop should there be a financial crisis or a currency crisis here. And so this will be one reason why we can't really take full advantage of that. Yeah. But nonetheless, there are ways in which we can maybe allow some of that activity move to Taiwan. In other words, the funds may be still registered in Hong Kong and Singapore, but the professionals may physically move to Taiwan and build up some of that talent pool here in Taiwan.
That's interesting. We'll discover more later.
I wanted to go back to inflation, as you mentioned, how the world's dealing with inflation and deflationary pressures, and especially in the U.S., you see the Fed increasing interest rates to kind of tackle inflation. How do you see that affect this part of the world in this region, as we see the Taiwan Central Bank making moves in response or actually in reference to the U.S.?
Yeah, well. There is definitely an impact here in Taiwan and, of course, elsewhere in the region, too. It's not so much in interest rates, though. Again, as I said, Taiwan has gone through many periods of rising and sharply rising U.S. rates with still low NT dollar rates. But there is some play elsewhere in the financial markets, namely, of course, the currency. And the NT dollar has depreciated in line, actually, I would say not even in line, to a lesser extent, indeed, than, say, Japanese yen and even the Chinese yuan. But also in terms of capital outflow. And there has been some capital outflow, not to crisis levels by any means, but significant nonetheless, in part due to the recent period of cross-strait tensions as well, but nonetheless, I think due to the interest rate differential between the two currencies as well.
Going back to the world, do you feel that this could trigger a global recession? Or do you feel that these inflationary pressures could be controlled in a way that we'll still see stable growth going forward?
It's like this kind of discussion never ends.
Yeah, for sure.
It's always circle back to the same question.
It does, and you know, no economist I know has ever forecasted a recession, in part because it's a very unpopular thing to say, in part because it's very difficult to do. That said, I can tell you that every time we have, and I mentioned this a moment ago, that we have an inverted yield curve, particularly to this degree, every time we've seen the spike in interest rates that we have seen recently, every time, in the past, not every time, but every time in the past 60 years probably, certainly 40, 50, we have had a recession following that within 12 months, 6 to 12 months time thereafter. What I often tell my clients and friends is that stock markets thankfully anticipate economic trends typically by about 6 months. And so if indeed we are looking at a recession globally in, say, 6 to 12 months' time, we may be nearing a bottom in the stock market.
We just discussed the current state of the world economy. Let's now move on to what implications this has for Taiwan. The International Monetary Fund has projected Taiwan's 2022 growth rate in terms of real GDP to be at 3.3%, the highest in all of East Asia. This is on par with Canada, a major global natural resources exporter. Taiwan's projected growth is also twice higher than that of the United States. Within the region, the country's projected growth rate surpasses that of Japan and South Korea, as well as China, which is going through lockdowns from zero COVID, and Hong Kong, where we expect to see negative growth.
What is behind the Taiwan growth story? Is there any particular industry that is driving this? Why we're talking about recession, the global fear of recession, why do we have such a strong growth that everybody can see right now?
Well, I think the answer is pretty clear to most people, and that's the semiconductor sector has been very strong. Semiconductors account, last I looked, on the order of about 40% of total exports, and certainly are a dominant component of the Taiwanese economy.
But that's before the U.S. Sent out the sanction toward China market and China expertise and companies, right? It's been this way for, well, ever since COVID.
Well, yes, and indeed to some extent before COVID, but certainly COVID stimulated a lot of that demand for goods, and that's carrying on certainly now too, particularly now that, of course, the Biden administration has taken some measures to limit the Chinese economy's access to these products, and therefore it needs to be more importantly sourced from Taiwan. What we will also experience as we move out of COVID into this post-COVID period will be a shift in the type of spending that consumers engage in, and that is less so in goods and more in services. Okay, so during COVID, people are staying at home, but they're buying lots of goods through online services, and still buying lots of iPhones, computers, and so forth. And so that shift may actually put some pressure on hardware exports. On top of that, because of the shortages that we've seen over the past 12 months and earlier even, there have been a buildup of inventory throughout the supply chain too. And those two factors could actually lead to some disappointment for tech sector shipments, tech sector revenues and earnings in the near term. And this is again why we still have been seeing weak stock market prices despite the strength in the economic numbers, the GDP numbers, and we could possibly see further downside in the short term as well.
I see.
You talked about the stock market, and there's also been 1.3 trillion NT dollars of foreign investments going out of Taiwan from that. What is causing this? Is it because of fears of, a Chinese invasion, or is it fears of supply chains? Or if you could elaborate and let our international audience know.
Sure. Well, again, I get a lot of questions about that particular number, and it is quite significant. It represents roughly 5% of the total Taiwan stock market's capitalization. It's driven by two major factors. One, as I mentioned, we're in a bear market. Equity markets are being sold down around the world. And of course, foreign investors are primarily institutional investors. And we know that, we can see indices and data showing that their holdings of equities have fallen sharply. So much so that it's actually beginning to create a more bullish signal. In other words, typically when they sell down to these levels of stock ownership, it often represents the bottom of the market. They can't sell anymore. But nonetheless, that was one factor, just selling equities. Taiwan, Korea, but U.S., Europe as well. Second is the currency factor that I mentioned. And for any investor who maybe want to maintain some equity exposure, they will shift that more to U.S. dollar denominated equities and shift out of non-U.S. equities. And again, it's not just Taiwan. There's a third factor, again, I mentioned earlier, that there has been, since the Ukrainian-Russian crisis, that concerns of maybe some Chinese military aggression against Taiwan, and that has spooked some of the money, but I don't think that's actually a significant portion of that. And to that point, I want to add that if we look back in history during periods of extreme cross-strait tensions, the first notable one being the 1996 missile crisis during the first full and free presidential election in Taiwan. The second being the 2018 announcement of tariffs on Chinese exports to the United States. Everyone thought, myself included, that Taiwan would be severely disadvantaged by that. And it turns out that from that point, and also from 1996, Taiwan stock market showed tremendous outperformance. 1996 was the beginning of the big bull market in Taiwan electronic stocks. And since 2018, we saw a lot of this sort of onshoring trends, bringing physical capital back into Taiwan or elsewhere in the region. And even though it's leaving China, it's still sort of, the supply chain is still under the control of the Taiwanese companies. And it actually increased their pricing power because their customers were relying on the Taiwanese companies to manage this very complex flow of goods throughout this whole supply chain.
It's great how you mentioned Taiwanese companies moving back to Taiwan, relocating their factories, and how much of that has helped Taiwan's economy, and in terms of, and how big is the proportion of that? Or do you feel that this trend is ongoing, especially with the U.S. China, trade competition and all that?
Sure. Well, I mean, there are limits to the extent that those physical assets can move back to Taiwan, because Taiwan has limited space, limited labor resources, electricity, and other resources are somewhat limited. But nonetheless, it has had a significant impact. I can't give you a number. But it had all this equipment and plants hasn't moved only to Taiwan. It's moved to Vietnam, elsewhere in Southeast Asia, India, and of course, through TSMC, Japan, United States as well. And again, as it becomes more disparate, again, you need to have that sort of control function played by these Taiwanese companies to be able to pull it all together. It's still a very intricate process to maintain.
I see. Well, apart from the equity market, I'm also very interested in the bigger foreign investment, because according to statistics, it has dropped since 2017. And no matter it's a direct investment to new companies or a new startup system in Taiwan, I know you've been bridging foreign capitals and foreign investments to Taiwan. And in your observation, how we're doing right now, Are we lacking news story, good stories? Why the overall foreign investment environment has just nonstop dropping?
Well, I think this is part of a process that began really even since the first financial crisis in 2008. We already began to see a process whereby global trade as a percent of global GDP peaked round about then and began declining. And since those 2018 tariff announcements, fell much more sharply thereafter as well. And foreign investment very often follows foreign trade trends. They are to support the flow of goods in and out of these markets. And so I ascribe that to this trend we saw. Now, not to say that it's all okay. This is clearly what you might call a deglobalization trend. And globalization in a purely sort of economic, from a purely economic standpoint, allows for tremendous efficiencies to be created, everyone focusing on their particular strengths. It does create some disruptions in labor markets, and there obviously are pushbacks from workers around the world. And so politicians have begun to, again, not be as supportive of that. But I think nonetheless, this is why we're seeing that. And I would imagine that you'd see similar trends in other countries as well, where this trade becomes a fairly important component of their economy. This is, again, another headwind that the global economy will be facing. It creates, as globalization creates efficiencies, deglobalization creates inefficiencies. In fact, a very interesting comment from Rahm Emanuel, the U.S. ambassador to Japan, put it quite clearly, and I thought, admirably honestly, that what we're talking about is adding what he called a predictability premium to the price of goods now. Rather than trying to make them as cheaply as possible, we want to make them reliable as well. And therefore, there may be a price to pay. This is not only potentially, shall we say, recessionary, but also inflationary.
A whole new thinking and perspective. Yeah.
There have also been a lot of talks, like, say, the U.S. 21st century trade with Taiwan. And if that goes through, do you feel that that would enhance or promote more investment into Taiwan from, say, U.S. investors?
Oh, for sure. As I said, investment follows the trade. And a lot of the exports out of Taiwan or out of any countries are exports by American companies that have invested in there and sourcing maybe goods that are manufactured locally, and therefore it does create a channel for local manufacturers to export, but the actual exporter may still be an American or European or a foreign country, Japanese, of course, as well. So the trade and investment are all part and parcel of the same flow, really.
We just spoke about the many factors behind the slowdown of foreign investment in Taiwan as countries around the world reopen and struggle to recover from the pandemic. Let's now hear from Alex Capri, Research Fellow at the Hinrich Foundation, focusing on advancing sustainable global trade. Alex shared with me the opportunities as well as the risks for Taiwan's industries as Xi begins his third term with intensifying U.S. China competition. Alex is a former advisory partner at KPMG and also lectures at the Business School and Lee Kuan Yew School of Public Policy at the National University of Singapore. Let's take a look.
Techno-nationalist competition between China, the U.S., China and the West generally is going to continue. The trajectory that we're on will stay on that trajectory. And so we will see the most critical, sensitive global value chains continuing to reshore and ring fence and friendshore. And that simply means that the U.S. and its allies are going to move critical supply chains, including semiconductors, critical minerals and rare earths, pharmaceuticals, lithium batteries. Of course, we have the issue of food security and energy security now, which has been enhanced and aggravated, I would say, by the Ukraine-Russian war. So that will continue well into the foreseeable future, and that means that the global value chains will continue to fragment, regionalize, and even localize.
Alex, you spoke about this trend continuing with friendshoring and fragmentation, what roles and opportunities do you see for Taiwan, given that Taiwan has been increasingly seen as a hotspot with tensions with China? From the U.S. perspective, do you see Taiwan as a risk in terms of its manufacturing location, or do you see the island nation having an increased role with the U.S. friendshoring trends?
It's a little of both. So to continue to concentrate intensive manufacturing exclusively in Taiwan presents a risk, certainly when it comes to semiconductors. But at the same time, as significant portions of the world look to reshore and to friendshore, Taiwanese companies become a increasingly attractive and valuable partner, and therefore the incentive to attract Taiwanese companies as investors and as participants within these reshored communities has increased. So Taiwanese companies are actually able to capitalize on that. And the Taiwanese government can capitalize on that too, because these companies have become highly strategic, and they are strategic assets and very attractive in that regard as partners.
So Alex, you actually see this as an opportunity more as a risk for Taiwanese companies?
Taiwanese companies have really enjoyed flying under the radar, right? They have been incredibly embedded, and they're pervasive in global supply chains when it comes to consumer electronics, certainly, and obviously semiconductors from a fabrication perspective. And so, they've really enjoyed that status. Now they're going to have to deal with a bit more of a spotlight as they are approached to become partners and investors in some of these other reconfigured, reshored supply chains. So that's going to change for Taiwanese companies. But they clearly can capitalize economically on that. And as I mentioned earlier, as strategic partners, they bring value to the Taiwanese geopolitical situation as well.
You just heard from Alex Capri, who spoke to Rath on the prominent role that Taiwanese industry could play in the U.S.-led friendshoring of supply chains among like-minded democracies as the United States continue to decouple from the Chinese economy. Peter, do you agree his analysis? And also, he said several semiconductor industry, to be specific, U.S. considered this as a matter of national security. What other industry that you think Taiwan could rise among this trend and fill the gap?
Well, I've always said that the industries in which Taiwan companies can really expand into and ultimately, to some extent, dominate are those where there are, where A is digitized, and B where there's large scale, meaning like at least tens of or even hundreds of millions of units per year, and third where there is a common operating system there. So suddenly, if you look back at the old days of the PC, where you had names you may not have heard of, but like Compaq and
I did.
DEC and obviously Apple and IBM, and they all had their own operating systems, and they all did their own manufacturing. And the same happened with not smartphones, cellular phones in the day that they were still analog based. Once they digitized, once they went to a common operating system, whether it be Microsoft OS or iOS for the smartphones, suddenly the manufacturers have no competitive advantage. They have to outsource, and they have to outsource to companies that are skilled in managing the supply chain, able to deliver on the quality and the price points that are needed, and these typically are Taiwanese companies. That next industry, in my mind, is going to be electric vehicles.
Electric vehicles?
Yeah, EVs, because again, they are extremely simple compared to obviously the internal combustion engines. And so it's suddenly, there's no value in manufacturing. Obviously, all the big car brands do their own manufacturing now. But once it becomes an EV, it's pretty simple, pretty straightforward. You still need to make sure it's done properly and, of course, done at a competitive price. And if you have a common operating system for battery management systems, or for the operating systems of the car itself, then suddenly you need to find a cheaper and larger scale source of production.
Now, to be specific, are you talking about an integration of the system or the design of the app, the software? Or because there are so many big players on the market already in the US and also, of course, in Europe. So what kind of role that Taiwan can play?
Well, I would imagine initially it would be subsystems. And that's again how Taiwan started, not so much in the smartphones, but
car.
in some of the, and I don't know what systems are in the car, but
the
no, I'm talking about the hardware though, the hardware. But this is why Foxconn has come into the sector, because they follow that same trend in PCs, and they follow the same trend in smartphones. And now they're going to do the same, or they hope to do the same thing in EVs as well, and I think other Taiwanese companies can. And indeed, if you look at Tesla, at one point, I don't know where it stands right now, but something like 12% of the components of Tesla cars were sourced from Taiwan, largely because at the time Tesla was so small, none of the big component suppliers would even talk to them. But in part because these are electronic components that the Taiwanese are uniquely qualified in supplying. And as those become more integrated units, subunits, larger units, or perhaps the entire vehicle itself could be produced here too.
But isn't it circling back to the same model where we assemble, we mass manufacture, we lower the expense? It's all the same Taiwan story. You just change to a different emerging market.
This is true. Now, I see where you're going with this, Catherine, and I'd say that, yes, it would be nice if Taiwan could develop their own brands, and there have been some instances of success there, but many instances of failure too, largely because to build a brand, you typically need a large domestic market to fall back on, to be your base case, to test out new products, and to have a pretty sort of guaranteed underpinning of demand to justify the further investment you need to make. And of course, Taiwan doesn't have that. Very few countries have that, really. U.S. obviously being one, China the other, Japan, and even in Europe you don't see a lot of such companies coming out. It's still a relatively fragmented market. So you can't blame the Taiwanese for always being in this, what you might call, I know, but this sort of treadmill of always making goods for other people, for other brands and so forth. There are new industries that are developing in Taiwan, we can maybe discuss those a bit later, that have allowed some Taiwanese companies to build their own franchise. But from the standpoint of the manufacturing sector and the electronic sector, it's still going to be the same model, I think, going forward. But there's nothing wrong with that. There's still a lot of opportunities.
Money to make.
Yeah, and there's still a lot of money to make.
Going back to what you both mentioned in terms of subcontract manufacturing,
Yeah.
what areas do you feel like, as Alex mentioned, in terms of friendshoring and all that, where the U.S. considers as a national security risk, that Taiwan could help in this aspect? Do you see any political
part,
or do you see any specific components or things that you think Taiwan industries could take on as the U.S. decouples?
Well, I mean, obviously the most likely industries will be the ones they're dominant in now and can continue to grow into. And these industries themselves have applications beyond what they are normally used for. PCs are becoming increasingly servers, so providing support for the whole cloud infrastructure, and moving into factory automation as well, which is something that Taiwanese companies could be dominant given their strength in both electronics and in manufacturing. Biotechnology offers interesting opportunities from an electronic standpoint, in that there are products whereby you can use semiconductors or electronic equipment or MEMS technology to do certain types of diagnoses, searching for certain biomarkers. And this is another area where we are seeing a number of companies emerging from. Biodata, generating genetic data, doing genetic sequencing much more cheaply at larger scale, using electronics, using semiconductors. And the benefits of that in terms of improving healthcare, reducing health costs, or even generating a business in bioinformatics more broadly of biodata, all offer interesting opportunities as well, although from a much smaller starting point.
But it's happening right now already, right?
It is.
From Taiwan companies.
Yes, indeed, yeah. I mean, in many cases, these companies are still more in the startup stage or the early development stages. They haven't really reached any scale or even commercialized their products yet, but it is in the pipeline.
It's interesting because I thought you were going to mention AI intensive or 5G intensive companies, but he said the biotech companies in general linked to the healthcare system and healthcare industry. So it's becoming a trend here, right here in Taiwan in a startup ecosystem.
If you look back when I was a student here in Taiwan 40 years ago, there was all this concern about the brain drain of Taiwan's brightest students all going mostly to the United States and to study. And of course, they weren't there to study French literature. They were studying either computer and math, or they're studying medicine and the biosector.
Oh, right.
The doctors
the doctor, yeah.
And so a lot of those who went into computer sciences went into industry in the U.S., built up relationships there, then came back to Taiwan, set up their own businesses, and used those relationships to become suppliers to their former employers. Same with those doctors, and many of them went to the pharma industry, who are now coming back and setting up biotech companies. And so this is why we have this two core strengths in these two industries, if you will, and now we're seeing the crossover of them beginning to emerge as well.
This is so interesting because we were just talking about U.S. decoupling the relationship and the tie with China in semiconductor industry, and that's why we have this leading position in the global market. Is that going to happen in bio market as well? If and when it happens, do we still have the advantage?
Well, for a lot of what the biotech sector is in Taiwan, it's mostly about drug development, not so much about the equipment or the technologies. Yeah, so it's more pharma driven in terms of the volume of revenues that are being generated right now. And in that case, unlike the electronics industry, where Taiwan's success was premised a lot on what we always call the cluster effect, that you have all these electronics companies all in the Hsinchu, regionally anyway, in the Hsinchu Science Park.
Ecosystem that kind
the
of
whole
supports.
ecosystem there, their customers, their suppliers were all literally across the street from each other. And it created tremendous efficiencies. And again, they were scaling into these large markets that were very profitable for them. Drug development is very different, though. It's every company for themselves very often. There isn't that cluster effect. And they're all investing a lot of money over a long period of time to develop one drug which may or may not succeed. And so it's a little bit more of a hit or miss thing rather than something that's more formulaic that can develop. We do have the talent pool here for sure. And as I said, we have seen a very strong pattern of successes. Revenues have been rising. They're about, probably this year for the industry, about 500 billion NT dollars. That's about 5 times what they were 10 years ago, which sounds like a lot or maybe not, but the fact is it's on that trajectory of a very sharp upward slope, and so it could grow quite quickly going forward. But there will be some throw-offs from that, as I said, such as some of these new technologies, these crossovers that I've mentioned.
And put into the U.S. China context, do we still have the advantage? That's what I'm asking.
I think we've seen a lot of, say, vaccine wars in between the U.S. developing its own with Europe and against China's own vaccines. And there seems to be a separation of the two. Do you see Taiwan's role go in and kind of help with, say, we have Medigen here in Taiwan and other PP&Es and everything?
Yeah, possibly so. But again, I don't see them as being very large scale. As far as sort of vaccine development, we may be helpful in supporting other countries in the region, But the fact of the matter is, we still don't have the firepower to be able to invest in cutting-edge technologies that companies like, Pfizer and Moderna have proven to be able to do in that field thus far.
That's because of economies of scale.
Exactly. And this gets back to what I was saying. If you want to build an international brand, or if you want to move into the very cutting-edge technologies, you need to have that scale. And at this point, we don't, which is why we're still playing more of a supportive role. And there's, again, plenty of money to be made in that supporting role, but we can't overinflate what we're able to do here. It's unfortunate, too, that actually one benefit I saw for the Taiwan biotech market in the past was the fact that the companies here were able to make filings successfully for new drugs in the U.S. market and in the China market, and had that sort of dual access to two of the biggest markets, pharmaceutical markets in the world.
You don't have to pick and choose.
Or they have the benefit of both, in fact. That may still be the case to some extent, but obviously at the rate of, or the direction in which things are moving right now, that's nothing that we can count on too much. But there are still other opportunities in the region. The medical device sector, though, has always had a lot of promise. And again, it's using...
Are we talking about wearable devices that everybody can bring home, the customers can bring back home and apply to daily life, or big machine, detective machine in hospitals, or?
Exactly that. And the fact of the matter is that everyone's thinking about drugs and vaccines and surgical equipment and so forth, but the most valuable investment that anyone can be making is in preventative medicine rather than curative medicine. And it's these devices that we can wear on our wear as watches or elsewhere to monitor our biological data can help us identify illnesses before they become untreatable or expensive to treat. And I think that that's an area that Taiwan can move into. There is a project going on right now under the auspices of Academia Sinica that are actually developing, I would say, globally cutting-edge analysis on how that can be used very effectively.
Is that also in collaboration with our semiconductor industry, given that these devices do require those chips and all that?
It can, this particular project is not yet in cooperation, but it can be applied not so much to semiconductors, but to the electronics manufacturers, who, many of them who used to be making notebook PCs and the like, are going into these wearable devices. And in particular, many of them are focusing on medical applications of these wearable devices. And if you can integrate that with better knowledge of what this project I mentioned, which is looking at both the genetic makeup of individuals and their disease risk, then you can really fine-tune the use of these tools to be very effective in preventing diseases going forward.
We've talked about successful unicorn stories with your companies, and well, you guys said it can happen, it could happen here in Taiwan soon. Do you see specifically in that industry that we're expecting a unicorn story, a unicorn company here in Taiwan, in biotech in general?
Well, so when you say unicorn, obviously we have a number of biotech companies that have become billion-dollar market cap companies already through drug development, and there will be more to come for sure. But if you're talking about some of these sort of newer aspects of the industry, like what we call bioinformatics, or again, this sort of genetics-related preventative medicine business model, I think there is very good opportunity. Again, Taiwan has a unique ability to be able to develop these tools because, first of all, the quality of our healthcare system here. And you need good quality healthcare systems because you want accurate diagnoses. You want up-to-date treatment, so the data that you're generating is in fact useful. You need to have a common platform for that data, and the National Health Insurance Administration creates that platform as well. And ideally, you need some uniformity of the population itself. And Taiwan has a fairly monolithic racial makeup, and that makes the data much more useful and applicable going forward. So these are unique advantages that Taiwan has in this particular space. And as I said, they are making good inroads in that direction. Yeah.
In terms of the borders opening up and all, what focus industries do you see, in addition to biotech, that you feel as the world comes back together to talk and all that for Taiwan?
So many of our friends going to Japan, to Korea next month.
That you think would be focus industries?
Well, it's funny. I flew out to Hong Kong a week ago. The airports on both sides, Taiwan and Hong Kong, were completely empty, and the airplane was completely empty. I flew back on the 13th, which is the day that Taiwan opened up the borders and eliminated the quarantine requirement.
And?
The airport was packed. The plane was packed.
Very responsive.
And so their very immediate response to this, there's going to be a very significant impact of that for sure. I feel the initial impact, though, will be more in the ability of the more traditional companies to operate more effectively. I know from our business at QIC, or Quantum International, that engaging with overseas investors is so much easier when you're physically there and they are forced to have meetings with you.
No Zoom anymore.
No Zoom, because in Zoom they can say, sorry, I'm busy, or maybe later. But if you say, hey, I'm in town, you're going to take a visit, come meet up, they're more likely to do that. And of course, it's a much more engaging relationship that you have in that meeting.
That way.
Yeah, exactly.
Yeah.
Exactly.